From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Coming up today, K-State's Jenny Ifft will talk about the risk management insurance available to you cattle producers through the USDA, citing programs that will allow you to cover your herd production, market price, and forage availability risks. Also today, the latest edition of FSA Coffee Talk. From the Farm Service Agency, Emily Evans will offer several farm program reminders, including deadlines for applying for the Non-Insured Crop Disaster Assistance Program, one of which is today for alfalfa losses. And later, K-State's Charlie Lee on the now-approved reintroduction of the gray wolf in Colorado and the livestock producer concerns that is raised. All that here on Agriculture Today.
A social distancing tip.
While the CDC urges you to avoid close contact, like hugging or shaking hands, there are other non-physical ways to say hello. Wave, wink, use sign language, salute, smile, give the peace sign, throw up an air high five, do jazz hands. Remember, stay a minimum of 6 feet or 2 arms length away from others, and stay home if you can. For more info, visit coronavirus.gov.
Let's all do our part, because we're all #alone together. Brought to you by the Ad Council.
We're glad to have you tuned in for another Agriculture Today. For starters, on this edition, some information to consider on the part of you beef cattle producers and your operational risk management. You want to take in what we have here today with our guest, providing some thoughts on dealing with that risk in your operation. Jenny Ifft is with us, agricultural policy specialist, K-State Research and Extension, and she has delved considerably into this area of agricultural risk management in years past and is continuing to do so here at K-State today. As we talk about this aspect of livestock production and management, Jenny, we liken it to what goes on the crop side, although in risk management terms, crops are something of a leg up here, aren't they?
Right. We like to say the federal crop insurance program is the foundation of the federal farm safety net in the U.S. But there's actually a lot of products that are part of the federal crop insurance program that can be used by livestock producers.
But they aren't near to the extent that crop producers employ those tools, right?
No. You have about 90% of all acreage of major crops that are enrolled in federal crop insurance. It's ubiquitous. Almost everybody uses it. It's been a couple decades now. People are very familiar with it. In the livestock industry, use of insurance products, now we're going to switch to saying livestock insurance so we don't get the two confused.
Right.
That's much less common. There's a couple reasons for that. First of all, just as these products they haven't been developed as long. So historically, the participation has been capped or limited, either the number of head or the amount of dollars. The cost sharing with the federal government has been lower. So that's one reason. There are also a few FSA-run emergency programs. So the Farm Service Agency does have some programs that can help livestock producers, especially for disasters or weather events. Part of it could also be culture, and that's something I hear a lot here, that people just aren't used to participating in government programs in the livestock industry.
They're comparatively new when you match them up against crop insurance products, and there have been attempts to refine them over the years and expand them as well, right?
Yeah, and we have seen some expansion in some of the products over time. Some of them, they were used for a couple years quite intensively and stopped, and some of them have just been going up. Some of the forage products have become quite popular in Kansas now, for example.
And we want to talk about several of those options at hand for you cattle producers to consider here. Just ask you a generic question, though, Jenny. Why should a producer look at these tools? What is in it for them specifically?
Right. Well, the way that I like to look at insurance is that farmers are always making decisions about the future. And you try to make the best decisions you can with the information you have. Information on costs, you're going to look at information on prices, and you're going to think about the weather, what kind of production you can expect. All three of those things are uncertain, and they can be different in the future than what I expect today. So the point of insurance is to get me closer to what I expect for cost, prices, and production, so that I can make better decisions today.
Something that all producers should take on, really, given the economic climate that be.
Yeah. If you're looking at tight margins, anywhere you can save money or make a better decision, that's going to be helpful.
There are specific categories of these risk management tools for livestock producers. Want to walk through these and some of the products that fall under these headings. There is production risk in any kind of agricultural enterprise, but most assuredly in cattle production. How would you define that, and what's out there for the producer?
Right. So if I think about production risk, I'm thinking about natural events that could cause death loss, that could cause slow weight gain, things that can't be prevented by good or standard management practices. Now, there's one product that can cover on-farm production risk, so from your own farm, and that's called whole farm revenue protection. It's only been around for 5 or 6 years now, and I think 8 policies were purchased in Kansas in 2020.
Wow.
So people are still learning about it. There's not a lot of awareness, and it's pretty unique, and it's really designed for more diversified farms because you have to cover everything that's produced on your farm. What's going to help a lot with that is if you have good tax records going back several years, that's something you'd have to take to your agent, and that's going to help you set your coverage levels. But that could protect against revenue risk. So if you have production losses or price drops that cause you to go below your covered level, then you could get a payment. And you could include up to $2 million of livestock revenue under that policy. And people have used it for livestock in the past, just not a lot. The one thing I like to tell producers or crop insurance agents when I talk about whole farm revenue protection is that it was designed for more diversified producers. So if you have the tax records and if you're fairly diversified, so say 3 to 6 or more major crops, it could work quite well. It's a pretty good value. If you're looking at a farm that has maybe, 20, 30, 40 crops selling into fresh markets, that's another story. But if you're fairly diversified, it could be a pretty good value, and you can include livestock in it.
But those tax records will suffice. Those are all the production history that one really needs for this coverage to work for them.
That's the main part of it. You have to have 5 years of that Schedule F tax records, and that's gonna be what's used to set your guarantee. You'll still need to have normal sort of standard production records to back up any losses that you might have.
Right. Again, that's under the Whole Farm Revenue Protection Program, which is available to producers. So you might consider that if you're a diversified operation. There is the heading of price or market risk directly here, and products that exist likewise for those producers interested in that angle. Jenny.
Right. And for that category, there's a couple of products, but the one I'd like to focus on here is called Livestock Risk Protection. And that protects against drops in market price. It's based on futures prices, and you can use it for feeder cattle or fed cattle. And there's been some recent changes to it that may make it more attractive to our beef cattle producers. The first one is that the cost sharing from the federal government is now higher. So previously, it had gone from 25 to 35% of the premium cost. And now it has increased from 35 to 55% of the premium cost. So it may be more affordable to producers now. They've also increased the number of head that can be covered under it from 6,000 head a year to 12,000 head a year.
And how it works, it in essence allows a producer to lock in a chosen price?
So yes, it lets you lock in a certain price. That's going to, not just any price, it's going to be a price that's based on futures prices. So I was looking at feeder cattle for September of 2021 today, and they're right around 160 per hundredweight. And you could buy a livestock risk protection policy at that level, and the cost is going to be about $2 to $7 per hundredweight to lock in that level. The most expensive level is going to be that 160. The cost of the product is going to go, the premium costs are going to go down with lower levels of coverage. So it's like anything in life. If you want the highest level of protection, you're going to have to pay more. If you want a lower level of protection, you can pay less. It works a lot like a put if people have worked with puts and calls before. So basically, you're going to lock in that floor, but you can also benefit from higher prices. And the cost is going to be a couple dollars per hundredweight, depending on what price floor that you want to select.
Well, since it is price and market driven, then what are the mechanics of enrolling in the program?
Right.
It's different from the whole farm coverage we just described.
Right,
It's more of a spot choice of what one wants to do what.
So if you want to, the first thing is you can enroll any time and you're not picking a policy. And then once you want to pick a particular policy, they call that an endorsement, and you go to your agent and you'll select a specific endorsement. Now, that follows futures markets, so the costs of that and the coverage levels can vary from day to day. So if I give you an example today, it might be different tomorrow. So that's just how that policy works.
It's fluid.
It's very fluid, yes.
But then again, if one is looking ahead and sees the feeder market, as you say now, at a level of $160, depending on the contract, and you think prices are destined lower, this is a great way to lock in that protection, it sounds.
Yeah, it would work. It's typically going to be lower than a put as well, or lower price than a put. So it can be a pretty good value to start, especially if you're just starting to think about managing your price risk.
What do you say to producers as they hear about these alternatives and think about where they might fit their operations? Analyze where they're at and where their risks are within their given enterprises?
Yeah, it always helps to know your break-even costs. It always helps to have good records. We agricultural economists recommend record keeping and knowing your costs for a whole number of reasons. And one of those reasons is so you can manage your price risk. So that's one message we always want to get out here.
All right. Well, Jenny, we've yet one more cattle risk management category that we'd like to touch upon before we let you get away today. We need to step aside for a break, and we'll get right to that afterward. Along with us, agricultural economist Jenny Ifft of K-State Research and Extension. And we will return after you hear this. This is the K-State Radio Network and Agriculture Today.
Did you know every Kansas farmer feeds 128 plus people?
Kansas farmers are hard workers, dependable, authentic, and sensitive.
Not only do farmers put food on your table, but they put clothes on your back and fuel in your car.
For more information about Kansas farmers, visit K-State Research and Extension online or stop by your local extension office. This message has been brought to you by the K-State Animal Sciences Leadership Academy participants.
Resuming now on Agriculture Today, across the way here is K-State Agricultural Policy Specialist Jenny Ifft. She's here today to help get the word out to you cattle producers about various risk management tools that very well might benefit your operation. All of these, again, are provided via the USDA's Risk Management Agency. And this is an area that's really starting to pick up steam, hence Jenny wanting to talk about it with us today. So, Jenny, we've talked about production risk and price risk management tools. There's this third category on forage production risk. And you tell us that this one actually has picked up a fair amount of momentum here in the state of Kansas.
Right. There's a couple different ones. This time I'm going to focus on PRF, pasture, rangeland, and forage. And I would say this is one of the more popular livestock insurance policies in Kansas and a lot of other states. We're up to almost 2 million acres of pasture that's enrolled in this program. So 2 million might seem like a big number, but we have more than 5 million acres each of corn and wheat enrolled in federal crop insurance. So it has grown a lot, but it's still relatively new and relatively small for livestock. What this program does is effectively protecting against drought risk. And it's going to be based on the rainfall in the area where you live. So it may be about a 12 by 12 mile area. It's called a grid. The specific distance and everything else is going to vary depending where you are. But rainfall is going to be tracked in that area. And they have rainfall records going back, 50 to 100 years. And they're going to make an index from that. So in your area, you can expect a certain amount of rainfall every year. And you're going to pick the times of the year where you want to protect against low rainfall. In that if you do have lower rainfall, you can get a payout. That's basically how it works. If there's less rainfall in your area, you can get a payment. There's no loss adjustment, nothing else. There just has to be less rainfall than there was historically. The trade-off with that is there's some risk, right? Because, I think almost every farmer I ever could talk to can tell you how one field got half an inch and another field got 2 inches of rain.
Right.
It's the same thing with pasture. So it is a simpler policy, but you are going to accept some risk. So you may have low rainfall for your fields and not get a payout. It can certainly work the other way. You might be in a good situation but still get a payout because of the local averages.
And as you view that tool, because it is weather-driven, the worth of it to the producer, if they look at the forecast and expect a drier year ahead, this might pay off for them. It's just good backup for them, basically.
Right. Well, feed is a major expense, and especially if it's a bad drought year, you may not have enough feed for your cattle. You may not have enough forage, so what are you going to do?
You hit the market.
You're going to hit the market. In those drought years, prices are going to go up quite a bit. And another option is that you could sell off some head. But what's going to be happening to prices? It's a tough situation to be in, and that's what you're going to really be trying to avoid. So the kind of question I would think about that is, if I don't have enough forage, am I going to be able to repay my loans? Am I going to be able to feed my cattle? And then you can make your decisions based off of that.
There's some stability to it is really the point with that particular program.
Right. And then just back to what I said before. If you can think about, how am I going to feed my cattle if I don't have enough forage? What am I going to do? How am I going to repay my loans? And it's the same question for market prices. If I go to market and prices are dropped, do I have enough reserves? Is there some other way to get through? And if you can really think through those scenarios, and then you can think through crop insurance, there's going to be a cost on that, right? So how much do you want to pay to avoid those scenarios? That's the basic approach I like to think about in terms of livestock insurance.
Very good. Well, once more, the USDA's Risk Management Agency website certainly has tons of information on all these options available. And check agmanager.info every once in a while for updates on particular tools likewise that you might employ, producers. Good overview, Jenny. Thanks for coming over.
Yep, you're welcome.
She's an agricultural policy specialist, K-State Research and Extension. Jenny Ifft with us, and sharing some thoughts for you cattle producers to consider on mitigating that operational risk in a variety of ways. Now we'll switch gears here in this segment, for we're round to time for another FSA Coffee Talk out of the state headquarters of the Farm Service Agency here in Kansas. And aboard this time is a state program specialist in the Farm Program Division of the Kansas FSA, Emily Evans. Good to have you aboard, Emily, as you're going to pass along a handful of important things as we're steadily getting to the point of capping off this calendar year 2020. And that includes some program deadlines coming up, a couple that aren't really imminent, but one that most assuredly is.
Yes, we do. We have a couple deadlines for ARC PLC and NAP. So our 2021 ARC PLC sign-up began in October, and we're going to continue that through March 15th of 2021. This provides an opportunity for farmers and ranchers to elect the program that they prefer, whether that's ARC County, ARC Individual, or PLC. It seems like a long ways off, but we want people to be able to come in and sign up as soon as possible. And as a reminder, always we want people to take a copy of their contract home that they sign. Just during these difficult times, we want to make sure that we have everything covered, and it's always a lot better if people take copies of everything that they sign in our office. Another deadline we have coming up is for the Non-Insured Crop Disaster Assistance Program, or what we call NAP. The next deadline for NAP is going to be actually December 1st, and then the following will be a March 15th, 2021 deadline. It depends on the crop as far as when the deadlines come. So make sure that you contact the county office that you do business in to ensure that you meet the deadlines you need for your crops.
Well, today is December the 1st, so what are the crops that need to meet this very deadline?
Those crops would be like your alfalfa. If you have any asparagus or certain fruits and vegetables, they would fall under that deadline.
Very well. So any of you alfalfa producers out there who are wanting to take advantage of that non-insured crop disaster assistance through the USDA, time is of the essence. Get that application in today. As far as other programs, anything else going on that you'd like to pass along, Emily?
Yeah, I have a reminder that I'd like to bring up. Every year we try to remind producers to let us know of any farm program record changes that we need to be aware of. And right now, we're well into our 2021 program year, so it's important for our farmers and ranchers to inform us of any changes that they have or they're going to have this year on their farm. And that could really include any changes in ownership or people that they have listed on the farm, if there's anybody that's now deceased that was listed on the farm, operators or tenants or owners, really any changes at all in their farming operation. We ask that people let us know as soon as possible. We want to make sure that we have our records correct and that payments are issued correctly, everything that you're signing looks right and has the appropriate names on it. So just wanted to send out a reminder for that.
It's seemingly some housekeeping, but it's highly critical to assure that those program benefits are going where they're intended to go. That's the point here.
Absolutely. It's very important, especially when we have ad hoc programs that come up for disasters and whatnot. We want to make sure that we take care of it before any other issues may arise.
If you some downtime during the winter period, not too long from now, get any of those changes to your local FSA personnel, get those items squared away as soon as possible. As far as county office accessibility, and this, of course, has been disrupted some, Emily, to say the least, by the COVID situation. What's the latest on that in Kansas?
Yes, it has certainly been a challenging time for everybody. And certainly the safety of our employees and customers is our highest priority. Currently, due to an increase in the active COVID cases across the state, producers should reach out via email or phone, whatever means they have available to them, regarding the opening of the phases of their particular local county office when conducting business. And producers can also check on farmers.gov online to obtain the same office status updates. Really, we just want to emphasize that all county offices are open for business. It's simply a matter of whether or not visitors can come into the office. Some county offices are available for appointments only, and some no visitors are allowed in at all. So it's really important for producers to call us first, and we'll work together to take care of the business at hand.
Coordination is also important in these times currently. And as far as doing that FSA business locally, do keep that conversation with your local folk there via phone and find out what the protocol is locally. Well, Emily, thank you for coming over and sharing these brief moments of information.
Thank you so much for having me.
A state program specialist with the Farm Program Division of the Farm Service Agency State Office here in Kansas, Emily Evans, with us with those reminders on this latest edition of the FSA Coffee Talk, featured every other Tuesday right here. Now we'll stand aside for a few moments. When we return, today's lead stories in the agricultural news. Also, K-State's Mike Brook awaits with another Milk Lines, as does Charlie Lee with this week's Wildlife Management segment. So keep it right here, won't you? This is Agriculture Today.
With the shortage of primary care physicians, especially in rural areas, health education and disease prevention are vital. K-State research and extension programs address quality of life, personal development, and health behaviors across all life stages of all social economic groups. To learn more about health education, one of K-State Research and Extension's 5 grand challenges, visit www.ksre.ksu.edu.
You're tuned in to Agriculture Today over the K-State Radio Network. Now, as of today, in our 97th year of broadcast service to Kansas and the Central Plains. Eric Atkinson with you, and on we go now to today's agricultural news headlines, courtesy in part of DTN. And let's first catch up on the state of the winter wheat crop in Kansas by way of the USDA's weekly report. Winter wheat condition in the state this week is at 33% good to excellent, 45% fair, and 22% poor to very poor. The emergence is at 95%. That's very near the 5-year average for this date. Incidentally, topsoil moisture supplies in the state, 1% surplus this week, 48% adequate, and 51% short to very short, subsoil moisture at 1% surplus, 41% adequate, and 58% short to very short. For a national view of winter wheat conditions now, we turn to the USDA's Stephanie Ho.
For the winter wheat crop,
emergence overall looking reasonably good. 92% is the winter wheat emergence number on November 29th, 1 percentage point ahead of the 5-year average and even a little bit more ahead of last year's 89%.
USDA meteorologist Brad Rippey says there are a few states where emergence progress is running behind average.
Colorado, for example, 95% emerged. 5-year average is 98%. California, 55% emerged versus the 5-year average of 57%.
He notes that these numbers don't seem significant.
But it is worth noting that there is significant drought, and if you overlay drought production areas with the U.S. Drought Monitor, we find that more than 40% of the U.S. winter wheat production area is currently experiencing drought.
He says the current drought also has had an impact on winter wheat condition, which is at the lowest level since the drought of 2012. This is Stephanie Ho for the U.S. Department of Agriculture in Washington, D.C.
Producers still waiting for checks from the Syngenta corn settlement can expect to see those payments in the next couple of months. This as a result of a court motion filed in federal court last week. That motion was filed by the claims administrator in the U.S. District Court for the District of Kansas, and it called for final disbursement to 194,000 claims. That totals about $390 million. Those checks are expected to be sent out on or around December the 30th. So far in 2020, over $475 million in claims were paid to more than 135,000 successful claimants. The court previously approved the $1.5 billion settlement from the lawsuit filed following Syngenta's release of Agrisure Viptera and Agrisure Duracade corn traits. The remaining money of each class settlement amount is expected to be paid as a result of the new court motion. Syngenta plays no role, by the way, in the distribution of those settlement funds. Class members receiving payments include producers and landlords who are expected to receive about 65% of their estimated total settlement amount, and grain handling facilities and ethanol plants that will receive about 50% of their estimated total settlement amount. Now, plaintiffs in the case alleged Syngenta sold corn with Agrisure Viptera and Duracade traits prior to those trades receiving import approvals in several countries, including China. China claims it found and rejected corn shipments containing the traits, which plaintiffs said led to lower corn prices. And producers interested in applying for the Coronavirus Food Assistance Program have a little more than 1 week left to apply. Here's more again from Stephanie Ho.
The deadline for the second round of the Coronavirus Food Assistance Program, or CFAP-2, is fast approaching.
Coronavirus has had a big impact on agriculture producers across the country, and CFAP-2 was developed to be able to help producers get through a year like this and cover some of the extra cost. We made CFAP-2 as simple and straightforward as we can, so sign-up should be fairly easy for most producers. And then a deadline of December 11th is coming right up, and we wanted to make sure that producers get signed up before December 11th.
That was USDA Undersecretary Bill Northey.
We've gotten over 700,000 applications and have paid out a little over $11 billion so far.
He says the program could go as high as $14 billion.
Nearly every agriculture producer would probably be able to qualify for CFAP-2, so we encourage them all to reach out to their FSA office.
This is Stephanie Ho for the U.S. Department of Agriculture in Washington, D.C.
And now with Milk Lines, K-State's Mike Brook. Mike?
Today I'd like to visit with our Kansas dairy farmers concerning what we should be doing as we think about the current pandemic and trying to keep our workers safe. As we continue into the fall and early winter, and as people begin to spend more time indoors and less time outside, the chances of spread onto your farm may be increasing. So, as a manager, what should you be thinking about? Well, number one, this is like any other virus. The idea is to try to avoid contact if you can. However, we still need to go about our daily lives. We still need to get the cows milked, calves taken care of, and the other things around the farm completed each day. So, how do you do that with your crew? Well, one of the things that you probably need to do is encourage your crew the employees that you have on your staff to try to minimize the chances that they might come in contact with the environment when they're just out in the community and doing the normal things of life. You see, the chances are that if you do see it on your farm, it will probably come in from the outside. So somebody will be out at an event or maybe in contact with a person that tested positive, and they would be likely the ones to bring it to your farm, and then the spread would begin from there. So as you think about when people are most likely to spread it to others, it's actually maybe before they show symptoms. Sometimes it's really not a matter of just trying to keep people off the farm that may be sick, but it's those that are starting to get sick that might be actually the most contagious and yet not really be feeling the effects. I also have reports of people that really do not show symptoms but still would test positive. So it's always a risk on our farm. So some other things you might want to consider just even outside your staff, and those are visitors coming to the farm. Who do you really need to have close contact with when they visit? Even people like your veterinarians and other service people that might be coming on to the farm. Again, it might be better to keep social distance. If you need to meet with them, meet outside rather than in an office, and making sure that we try to do all we can do to prevent the spread onto our farm or spread to others if it happens to be on our farm. Should you see an outbreak on your farm, it's really important that you try to isolate those that have tested positive and making sure that they're not coming onto the farm until symptoms are gone for the recommended period of time. This is Mike Brook with K-State Research and Extension, encouraging our dairy farmers to continue their diligence in trying to keep COVID-19 off their operations.
Thanks, Mike. And this is Agriculture Today.
Social distancing slows the spread of coronavirus, so if you have a fever, dry cough, and shortness of breath, call your healthcare provider before going in. More info at coronavirus.gov. Let's all do our part, because we're all #AloneTogether. Brought to you by the Ad Council.
For you next on this Agriculture Today, our weekly wildlife management segment, as we're joined once more by longtime K-State wildlife specialist Charlie Lee. Charlie is going to tell us about a decision that was made in Kansas' neighboring state to the west, Colorado, on the release of the gray wolf. And there's lots to this story. We'll start with the status of the gray wolf up to present day. It was once listed as an endangered species, Charlie.
Yes, gray wolves were placed on the endangered species list in the 1970s, and then in 1995 and 96, the federal government reintroduced wolves to Yellowstone National Park as well as Idaho. From there, the animals spread to Montana, Washington State, Oregon, and Northern California. As many of our listeners know, wolves are large predators. There have been problems with wolves killing livestock, farm dogs, threatening people, but actually few numbers of livestock have been reported directly killed by wolves. And some of the other reports of threats to other domestic animals are probably overblown. But this was an issue. Wolves have seemed to have done well under the protection of the federal government. But the U.S. Fish and Wildlife Service then announced their decision to take gray wolves from the Federal Endangered Species Act on October 29th. They based that decision on its assessment that the gray wolf populations in the lower 48 states are no longer threatened with extinction and have met the recovery goals for the listed populations. And that's one of the very important tenets of the Endangered Species Act. Set up a program where the animals can benefit and thus eventually be removed by following the federal recovery plan.
This action then designates the gray wolf as a state-managed species, you say?
Yes, when the animals are taken off of the Endangered Species Act, then management of those populations fall back to state professionals. And I think the resurgence in wolf populations has been due to the efforts of state management and federal employees to restore gray wolves over the last 20 years, and they've been successful. And I think that they were probably justified in taking them off of the list. There are wolves continuing to expand their range, and I think that states need to be ready to develop management plans and initiate those plans when and if wolves recolonize some of the states that they've previously been found in.
So what has happened in the state of Colorado? Gray wolf release was actually on the ballot in this most recent general election.
Yeah, well, the wolves were largely absent from the Colorado landscape for more than a century, but recently the voters narrowly approved a ballot issue to begin the reintroduction efforts. Colorado Parks and Wildlife will begin holding public hearings to determine where on the state's western slope it will reintroduce the carnivores, because the ballot initiative said Colorado Parks and Wildlife will develop a plan and reintroduce an undetermined number of gray wolves, but enough to ensure the wolf survival by the end of 2023 on former habitat in the state west of the Continental Divide. Proponents of the ballot initiative emphasized that means they expected, they called it, paws on the ground within 3 years. The vote was narrowly passed. As you might expect, there's a lot of controversy. The Colorado Cattlemen's Association said that forcing wolf reintroduction in western Colorado would strain their collaboration efforts in other common statewide challenges, such as conserving open landscape in the face of increasing human populations along the Continental Divide, and that ranchers have been good conservation-minded folks, and that it would be difficult for them to encourage the reintroduction of wolves in that area. Although I think it's important that we remind folks that the new law in Colorado requires compensating livestock ranchers for any losses caused by wolves. So I think what that means is that it's going to continue to be a controversy. It's going to be a challenge biologically to get it to occur. Not only is the potential threats there to domestic livestock, but perhaps a bigger threat is to the state's existing deer and elk herds. In other areas of the country, elk and deer in the greater Yellowstone area, more than 1/3 of their numbers that are taken by hunters are also taken by gray wolf packs. So I think if that type of loss continues in Colorado, it will only fan the flames of this controversy and make folks wonder whether this ballot initiative was the right thing to do. There are some folks that think this is probably more of a political issue than a biological issue. I'm sure with the proper amount of protection, the wolf population can succeed in Colorado, but it's going to take some losses and a lot of growing pains to get to where both groups are going to be satisfied.
And lastly, have to ask you, this release, when it happens, in the western part of Colorado, any chance that the wolves would migrate into Kansas?
Well, there's always a chance. So we do know that in the past, wolves have migrated from the Great Lakes region. I can think of 2 separate locations within the last decade where those wolves were found in Kansas. You would think if there was a source population that was a lot closer, that eventually we would get some animals from those more localized populations. Would they establish in Kansas? That remains to be seen.
In any event, we will watch what transpires in Colorado. It's a contentious issue there, but once again, on the strength of the winning vote in the recent election, gray wolves are now cleared for release in the western part of the state over the next few years. We'll watch what happens. Charlie, thanks for the update on this. Charlie Lee, former wildlife specialist, K-State Research and Extension. So goes our Tuesday edition. Thanks for listening in. Eric Atkinson here. Please rejoin us tomorrow, won't you, for another Agriculture Today. Over this, the K-State Radio Network.